Testing, testing. Are we live? Welcome back, everyone, to the Prospero.Ai stock market live stream. Like the video if you haven't already done so. I see the numbers ticking up. People are rolling in on into the stream. We have a lot of good topics to cover on this CPI report day, which is where we'll start when George gets into the stream. Came in at expectation, but we just crossed a milestone mark that we hadn't been at since 2021 in the inflation territory. So we'll cover what that means for the markets and what a good report we saw this morning. Hey, George, welcome to the stream. We got some people tuning in already. And then, like where I left off with the chat, I might even share an anecdotal story about the state of the economy. We'll see if we have time. But we have another story to cover. The M&M maker Mars just pulled off the biggest acquisition deal of the year so far for any company. We'll talk about which company they just acquired and what it means for that. And actually, the stock will be going private. So, but we'll give you all the details about that story. Next, in a first of its kind, Wizz Air is launching an annual subscription pass for all you can fly. We'll give you the details on how much they're charging and if any USA airlines will try out this strategy if this European airline sees some success with it. And although we didn't stream yesterday, I'm sure our viewers pay close attention to the market and probably saw how Starbucks stock ripped up 28% yesterday. It was off the news that they're hiring a new CEO, taking the Chipotle CEO. So we'll talk about what that means for Starbucks. And it was shocking to me to see a stock move that's that big of a company move that much just for a CEO change. So we'll discuss all the details surrounding that story. And then we have a story to cover based off rate cuts that we have been covering on the stream for some time now, likely to happen in September. The market is already beginning to price in the rate cuts, so we're seeing interest rates dropping, and people took advantage of that already. So a lot of new mortgage refinancing happened last week. So we'll cover what stocks that is good for, and if that's actually a bullish or bearish story overall for the stock market and the economy. And then a stock we covered on Monday, ASTS, will give an update on that. It's the little engine that could this year. It's just a stock that's risen from down in the depths of the bear markets of the small cap stocks. And last but not least, before we go to the model portfolio update at the end of the stream, it seems like our viewers and our social media followers love hearing about Warren Buffett. So we have another crazy stat to share based off his Apple sell that he did earlier this year. But George, I think we should start off with the CPI report that, although it was bullish and the market initially reacted positively to the 0.2%, which was at expectations, now the trailing 12-month CPI is under 3% for the first time since 2021. It's at 2.9%. The markets haven't exactly ripped throughout the entire day. So what are you feeling, and how did you react to the CPI report you saw this morning?
Yeah, I saw QQQ down as much as like 0.7% today, which is crazy considering like 2 days in a row. I mean, PPI was even better. The producer price index was even better yesterday. So we continue to see a very strange market. The nice thing is, and we're going to be talking about it in the newsletter, it gave us an opportunity, especially I think, to double down on SMCI, because we were looking at SMCI this morning when it was down almost 3%. And it was 96 net option sentiment, 97 net social sentiment, and QQQ net option sentiment. It had gone down to 43. We would have probably been better at adding as it went down if this didn't happen, but we saw it rebound back above 50, and it's been kind of strong all day. So yeah, the weird market continues. We get 2 days of great news, and then the market initially, actually before the news, the market was going up, and our first SMCI position we're still a little under on because it was up 2% pre-market before the news, and then the news happened, and And normally, like I'm saying news a lot, and you're like, oh, buy on the rumor, sell on the news. But there was not as much rumor time between two good inflation readings. And typically, this is the kind of thing that we see a good inflation reading, and there's at least one day of good data. And granted, it was at expectations. There were aspects of it that I would say were positive and beating expectations. But especially considering the beating expectations yesterday, especially considering getting under that 3%. When the target is 2%, we're certainly like, the Powell target is 2%. You'd certainly think it would be a more bullish day than it was. And, perhaps that's coming. Perhaps, institutions know there's a tentative market. They're trying to shake people out before, it runs the rest of the week. But yeah, it's I mean, when I say shake people out, I mean by shorting it, because the options flow has certainly been pretty positive in a lot of directions. But yeah, I mean, we're in a volatile market. And the problem with a volatile market is, even when we're seeing the kind of signaling that we saw in the morning and the clear thing, I was hesitant to go harder after the gains than I would have if I felt like we were in a market that was less volatile.
And so recently, I feel like the market's biggest fear has been the USA economy is headed towards a recession. We saw the QQQ net option sentiment at zero. I think SPY even hovered down there for less time, but I think it got there as well. But those net option sentiment readings are recovering. I think they're both in the 50s right now. So do you think, the Prospero signals are sniffing out and the institutional betting is sniffing out a soft landing scenario being more likely after the recent data and what we're seeing in the Prospero signals?
Yeah, definitely. But I also think we're seeing some tentative behavior from institutions as well. We're definitely looking at, a situation where what we've seen is even yesterday after the PPI reading, again, I kind of got a little more bullish as the day went on and QQQ net option sentiment stabilized. But yesterday I was seeing readings in the 20s and readings in the 40s in QQQ net option sentiment. So even on a day of good economic news, and I think some of it might have been nervousness that they didn't want to go too hard in case the number today missed. But yeah, I mean, it's just kind of crazy what we're seeing on an ongoing basis.
So I think it'll be helpful for the people who use our signals, and I'm curious about it too. When you see QQQ net option sentiment, the signal itself moving that much and having so much volatility, can you pinpoint any kind of, I don't know, I don't know about monetary amount or just like what's driving that level of volatility in that signal? Which for me, I would expect it to be one of the less volatile ones since it's like the overall market. So what is it picking up that'll change it that much interday?
So the two primary reasons for an index level signal to move that much would be one, hedging that are being removed, right? Let's say you enter a new long and you have a put or a big new long position, but you're not quite sure how things are going to go and you want a put to hedge it, right? You could put that on and then decide that you want to remove it, right? And there could be a lot of people doing that because institutions a lot of the times will behave, we talk about it all the time. They're taking each other's temperature, right? So they could say, I'm bullish, but I'm hedging. And they'll be like, others are like, good idea, right? And then that ends up being the predominant behavior. The other situation is that they could be swing trading. A lot of especially algorithmic trading, especially that kind of volatility. And it's probably more the latter, right? Where they know, especially a lot of retail are unsure. So they're pushing, they're grabbing puts, pushing the index down. When it hits a level that they feel like they have to buy, it's going back up. And like, actually, I'd say especially QQQ today, I saw it hit a few ceilings and a few floors. And when you use technical analysis, so you're basically getting a lot of bots that think at that level with these market dynamics that they're, pushing the market in different directions. Now, keep in mind, net option sentiment is for any option that is less than 6 months expiration, right? So it's quite possible that options that get closer to 6 months, those are staying pretty stable. But QQQ net option sentiment could be swinging a lot if there's options less than a month that are seeing a lot of swing trading. And, anytime you have a volatile market, you're going to see more swing trading. People are going to see that as an opportunity, that volatility as an opportunity. So it kind of begets itself. The longer the market is volatile, the more bots see opportunities to move the market and swing trade. The more swing trading there is, the more swing trading there's going to be, because there's a lot of momentum involved in that. And they could say, oh, the bots can pick up that if things are trading in these channels, right, they're going to emphasize and feel more safe in putting on larger bets as it gets to the edges of those channels. And yeah, that's the kind of thing they'll see, because generally in bull markets, let's just use it as an example, institutions, robots, whatever, they're going to do a lot less swing trading with puts, because it could be very dangerous where you're putting on puts and then the market just decides that it's not going to trade in that channel anymore. It's just going to blow past it, right? We're not in that kind of market right now. We're not in that kind of market where we're just seeing bull runs blow past it. So we're in a safer environment to swing trade. We're in a safer environment to buy puts generally. And, that's what's going to happen until, the nice thing about having robots that you send out to do your bidding is versus someone that has to have like a stop loss in place. Institutions don't need stops when you have robots, right? They could basically say, okay, we're going to keep having these puts on, or we're going to keep shorting until we see on the instant that this pattern breaks, then we're going to get out. And what institutions have, and why Robinhood sucks so much, is that institutions actually have the benefit of seeing a bunch of retail investors like basically putting in buy orders because they're bullish and being like, oh shit, retail's getting very bullish. We're going to just like jump in front of their trades and close our shorts. Like, even though retail put in these big buy orders before. So we always say why Robinhood sucks. That's a big reason. Because, even if you've got the one up on shorters and you're seeing the bull momentum is going to carry it past them, they can still exit their trades in front of you.
Yeah, I think that was some great info. So I'm happy we covered that for anybody. Hopefully, it was helpful to our viewers out there. You mentioned how sometimes volatility can bring on opportunity. It would seem that Mars, who is the maker of M&Ms, very big food company, would be thinking along the same lines as you, because they just acquired a company called Kellanova, which was a spinoff from Kellogg's. They make Pringles, and when Kellogg spun them off last year, it was some of the best growing products within the Kellogg brand. And it seems like it attracted Mars, who just acquired them in a $36 billion deal, the biggest one in the business world of this year. When I saw this, I immediately thought about how, we've covered the Google monopoly story recently and how a lot of people are worried about monopolies in big tech. And then I instantly thought about this photo I've seen where it's like 5 or 6 food companies basically make all of the products in people's cabinets, but it doesn't seem to be a problem, and no lawmakers are worried about this Mars deal. So I think that's kind of a funny contradiction to bring up there. But what do you think of this deal and now Kellanova going private by being bought out by Mars?
Well, I'll give you a little lesson on monopolies here and competition, right? The reason that Google is a classic entrenched monopoly is because there's the layer of no one really uses other search, right? So that kind of makes them a classic monopoly, right? But what makes them an even bigger monopoly is the fact that they can start dictating terms to brands, anyone that wants to advertise. Like, they've actually been criticized a lot for the way like their keyword ranking systems are organized. And people have accused them of they're always just like, the algorithm is the algorithm, but their enemies have accused them of basically like manually lowering them in the search rankings, which they absolutely could do, and no one would have any idea. Because even if they did do that, like, by the time someone sued them, like, they could change the code back, they could delete it, they might even have it wired up to delete, because Google, for those that don't know, they have a 20% rule. So 20% of the time that you interact with Google, you're not interacting with like the core Google product. You're actually interacting with a test algorithm. And that's how they're always improving. Anyway, Google's a very interesting company. But like the big problem with them being a monopoly is like if you want to advertise on a search engine, you can't be like, oh, I'm going to go to Alta Vista or like what I don't even know who you'd say. Like you basically like if you want to rank in search, you got to go to Google, at least for the time being, right? But you know, it's not considered a monopoly. And there's always like, oh, like America's great, there's competition. And in the case that like if there's a Kellogg's and a Post, right? I'm thinking about cereal. Like there is competition, right? There's not an equivalent, we just said who's the other search engine, right? In the case of Kellogg's, for being specific, like, yes, there is at least some competition. So it's not a classic monopoly. Now there's a term monopsony, and there's tons of these, largely boring economic terms, like where you could end up having monopolistic behavior outside of a pure monopoly is if Kellogg and Post decided that they were just going to both raise their prices always in the same. They were talking that way, but that's the thing about competition. If there is competition, it tends not to go down that way. Because even if they have like some wink wink agreement, the second they need to like raise their sales or whatever, like those companies don't trust each other, and one's going to lower prices or like whatever. So it's not a classic monopoly, but so if you're not seeing classic monopolies broken up, you're not going to see anything. But what you regrettably see in this country too much is that even non-classic monopolies, a cartel of companies will engage in monopolistic behavior nonetheless. What instantly comes to mind is Uber and Lyft, right? They grabbed the rideshare market. They were so cheap. And then, they raise prices, they raise prices, they raise prices. And sometimes they'll like undercut each other. That's why people check both things. They'll undercut each other. But if you look at where prices were, a while ago versus now, it's night and day, right? So that is monopolistic behavior. Neither of them are monopolies, but they're definitely both engaging in monopolistic behavior.
Fascinating discussion. I've never heard that term you used. What was it for the like monopoly? But it's like when there's many companies involved in it.
Monopsony. Yeah.
I'm gonna research that later because that's like I feel like that's what a lot of sectors and areas of business world become over time, right? Because there's winners that kind of grab market share, but then there's like the longer the time plays out, like the more concentration amongst a few like businesses or companies there is. It seems like, but that's a really cool point. I never knew that before.
Yeah. So Google is also a monopsony, right? Because a monopsony is if there's a buyer, only one buyer, right? So you could look at Google as the monopsony in that they're the buyer of ads, right? Like they do sell them to us, but basically like nobody else is buying search ads other than Google. But I never really liked economics. I might even be wrong about that. Like the thing that always bothered me about economics and why I like stocks a lot more and like the tangible things is like every economic assumption was just like, well, all else equal, this would be true. And in the real world, there's complicated multivariable equations on everything. You never get an all else equal. So what you're learning in economics isn't really the best thing. Even something like we're seeing it right now, like where, labor should make bad labor numbers should make the market go down, right? But it didn't. It was going up and then it went down, right? That's a perfect example of, and then we got one today. Like good inflation numbers, especially two good readings in a row, that means probably that you have a good day yesterday and a better day today. We didn't see that. So like pure macroeconomics is very tough. It never really exists. And that's why I always liked, financial statement analysis, accounting, things like that, didn't require you to suspend belief in all these other concepts in order to do a proper analysis.
And one analysis that the Prospero signals have gotten right in a stock that I know you wanted to talk about today is ASTS, which if you we actually covered it on Monday. So if you're in the stream, you probably heard a little bit about it. But if you're someone who wasn't there and haven't followed the stock, you'd probably be shocked to hear that just year to date, the stock is up over 250%. And that really doesn't do it justice, because in May it was trading at $2.20, and today it's over $20. So almost a 10x just since May. How is this stock getting this kind of performance, George?
Well, I mean, it's got these important, satellite cell phone contracts, and it's got big deals with like providers. I live in New York. My cell phone in certain places, like I don't get calls in this place and I'm up high a little bit, which, I don't know. That doesn't make sense. Maybe I'm above the cell towers. Who the hell knows? But yeah, like this ASTS solves the problem of patchy cell phone service because, it's coming from a place where everybody gets reception. Granted, it's new tech, but it's exciting tech. Like basically, like there's a binary, there's a binary outcome. Like if these, like they're launching satellites, if they actually work, this thing's gonna go maybe literally to the moon. If they don't work, it's gonna crash, right? It's priced more likely that they'll work. I think it was something like Deutsche Bank has them at a like 270. Oh, it was like maybe like a 600 price target in 2027. I'm confusing things. It's an astronomical gain if it works, right? I'm talking today because I'm actually still debating if I want to hold it or not. The Prospero signals have been, pretty good, but it's one of those things where we see in SMCI sometimes where there's good net option sentiment, good social sentiment, but also high dark pool and short pressure. So those things are kind of at odds. One thing is saying buy, the other is saying it's also pretty risky, maybe not. Because like the danger of dark pool, just to remind people, and short pressure, is like they could have decent earnings and the stock still go down just because there's so much downward pressure from institutions and they're all kind of pushing it because they want to get it on a better price, right? So that's the hard thing. You could be right about the earnings and then wrong about the price action. And that's why we generally guide away from it. But there's an added piece of data that we wanted to give people. There's warrants being sold in ASTS that basically gives them access to additional capital if they maintain a price above $18. I think it was for like 20 days, but there's like 8 days left in that. So basically, like beyond normal, they have every incentive to keep people excited so those warrants trigger. So that's the only thing that's kind of bending me in that direction of holding, just because like also if you think about it, and I've mentioned this before, companies do have some leeway when they can announce things. Also, how much revenue to recognize. Like they could also like choose to forecast revenue based on aggressively recognizing revenue in the next year. That might mean they could recognize less revenue in the following year. There's a lot of leeway that companies have legally, highly legally, to decide how they want to report. And if these, if they want these warrants to trigger, they're not going to trigger if they say anything bad. So that's what's kind of leaning me. I don't want to bet too hard on it, but that's what's leaning me on towards a hold. So anyone that saw it with us, that's holding with us, I'm leaning towards a hold unless I see like a scary move in net option sentiment or something like that before the day's close, but we're getting close.
I do have a follow-up on that. So although the warrants and the stock need to be above 18 for 8 more days, would be bullish for now. Once those 8 days are up and the warrants are triggered, would that be a negative on the stock? Would that cause, what does that cause? Dilution or anything? Or how does that
No, I think it
dynamics of
gives
that
them
play out?
access to more capital. Um, let's see. I like this is something I'd not normally do, but it came from a source that I trust. I didn't actually look at these warrants. Um, I got it secondhand from someone else, which I always tell people not to do. So I'm scolding myself here. They're called ASTSW. Um, let's see.
While you're looking that up, I'll just also share the other thought that I have is, if ASTS, their business seems like takes a lot of funding to start up, and it's very hard to, for a startup to give them any kind of competition. I'd imagine their biggest competition right now is probably Elon's company and Starlink product. So I wonder if it's just like ASTS versus Elon right now.
Yeah, I mean, I think it's, but the difference is like Elon's going his own way, and like ASTS, I believe, has like deals with I think at least Verizon, maybe AT&T. Like that's the difference.
That's a good point. Yeah.
So, and they need the distribution, right? Like ultimately, like people getting Starlink. What is? Oh, I never. It's interesting. I don't really. I can't remember the last time I looked at warrants that weren't like um that weren't uh, like employee benefit warrants. So it's just like, what's going on with you guys? Um, mm, you'd think that you'd think people would want to make this a little easier. Um, all right, I'm gonna just do the responsible thing, and I'm gonna go to sec.gov and type in ASTSW.
Well, it's this level of deep research you can only find on the Prospero.Ai live stream. So I see we have 750 people in here. Like it up, chat, and I'm sure we're going to get this answer for you very quickly. Sorry, my curiosity got the best of me. I had to ask this question.
No, I kind of wanted to know. I was just being like, I didn't have enough time before. But I don't know. I'm on a bad computer to read this. Do we have more topics?
Yeah, we'll move on and we'll try to figure it out at some point throughout the stream. One of the topics I wanted to bring up today. It seems like such a play from left field by this European airline. It's called Wizz Air. They're launching an all-you-can-fly annual subscription pass. And without hearing the price, it sounds like okay, that could work out. But the price is set at $550, which seems extremely low. It will begin with 10,000 memberships. Each booking is subject to a $10 surcharge, and you also have to pay for your luggage. Um, with that price, I'm wondering if this is a good idea or can be profitable. But if it is, do you think USA Airlines will follow suit and launch something like it as well?
I don't know. Like, I'll tell you my personal experience with Wizz Air this summer, which was I'm not going to be able to research this live. My personal experience with Wizz Air this summer was it looked like a good price, but then they were doing everything possible to get me to miss the flight. Like I was there like an hour and 45 minutes before the flight was taking off. And, they required you to print your boarding pass or you had to download an app and then the line was long and then you had to go to a different place for your luggage. Like they wanted people to miss flights. And also like they had different like bag weights. They had like 3 or 4 different choices for bag weights and packages, and it was just like it seemed like it meant to be very confusing. So I think they're trying to like clip, you know, gains on the bag weight. They could, I'm sure, you register for a flight and then maybe if you miss it because they try to get you to miss flight. Like maybe it ends up being, even more than a ticket. So I think that this doesn't seem, it's not economical unless they're trying to screw you over in some other way. So I don't really see I don't see American Airlines doing that, because I think there's definitely, for a while there was a move to screw people over, and then or like make things more complicated. But even if you see like Southwest is struggling, um, and like they didn't try to screw people over, but they had their like unique boarding system. They're changing that. Like I think people are moving more towards like even being willing to pay a little more just to have like a straightforward, stable experience. So like these flat fees are basically intrinsically unstable, because they're not making money off you unless they figure out ways to charge you in other ways, or ways to like have you miss your flight. Or yeah, like I think Wizz Air could end up being profitable with this, but people hate the product. And like it seems like these budget airlines don't care about that. And I think US airlines have flirted enough with that. And like now, like I feel like for a while, like everybody was like Delta is the worst airline, and now people like Delta again because I think they made changes. Um, but I think now everybody like insults United. I use JetBlue just because like I've never really had bad experiences with JetBlue, and even if they fuck things up, like I feel like it's rare, but they do really try to make it better. And like I even like there was a flight that like ended up getting canceled once, where I got like a hotel voucher for, and it wasn't very hard. And like I've gone and like almost missed my flight before, and like had them rebook it easily with me not even being able to go like to the airport. There's a lot of things that they just, make life easier with. So I think that's the direction that airlines are going, of like not being horrible anymore, because they tried to be more and more horrible and just save money, and that didn't really work for them. The
That
US
can never that can never be a long-term good business strategy. Like having a terrible relationship with your customer doesn't
Yeah,
sound good.
exactly.
So
Like giving them less space, like
yeah,
canceling more flights, like yeah, like the adversarial relationship with the customer, will work. But like that's a good example of like monopolistic behavior that doesn't work through competition. To tie it, like, you had these airlines just basically getting like worse and worse and worse, and even like Spirit just being like an airline like Spirit being like, oh, like hold my beer, we could be worse than all of you, like. And then, but then like new airlines like Virgin America was there and then got acquired, like JetBlue. They were kind of like born out of like competing by not being crappy. Um, and and so yeah, I think that it is interesting that when companies have adversarial relationships, but like, yeah, I mean, sometimes it works. Like, I cannot believe Robinhood has recovered like it has. And like everybody was leaving, everybody knows that they're basically trying to like screw with their customers. And here they are back because people can buy crypto on there, and they have 24-hour markets, and they're just like they're offering ways, like they're offering new products that like seem nice, like the same way, lower fares seem nice until there's all these hidden problems in them. And I don't know why people didn't get wise, the first, 18 times. And we saw it recently where like they were taking 24-hour trades until they weren't, because it didn't benefit them anymore. And it's just like, yeah, I don't know why people need to keep learning this lesson.
so the next story is one we have to cover because it was shocking for me yesterday when I saw Starbucks stock, the move it made, just off the announcement that the now ex CEO of Chipotle, Brian Niccol, will be joining Starbucks. And the company is a large company, so with the 28% move, it added $20 billion in market cap. So I think Brian Niccol is going to have to rework the deal he just signed with Starbucks, right? He's the value he's bringing. I mean, it's crazy.
Well, we don't know his deal. I think he'd be pretty stupid if he didn't negotiate, some kind of bonus based on, stock price, market cap. Like, that's how like CEOs are traditionally like, there's a standard pay fee. A lot of the times there's upside, but typically CEOs, like the bulk of their pay is in stock options, warrants, things like that. So there's like an embedded upside in the price going up. But sometimes there's performance fees where they get more options the higher the price goes. And I'm sure there's something like that. And what I was saying to you when we were like going through these stories that makes this even more true is it's just like I wouldn't really consider Starbucks to be a better company than Chipotle at this point, especially like with some of the problems with like unionization. Like there's big issues to solve. I guess there's more upside, but like to me, the only thing that would get him to move would be a very nice pay package. So I imagine that exists, and I imagine there's some upside to the company going well. And he probably made himself a lot of money when it was announced.
Well, that's an interesting thing you just said about how there are actually very difficult challenges at Starbucks to solve. Maybe that enticed him and he's looking forward to that opportunity. Do you think that could be possibly the reason?
Yeah, you know, upside is always like he could look at where the stock price was and where his options were negotiated and said like, hey, I could easily in the next 2 years get a 40% gain on a better pay package, right? Versus looking at Chipotle, he might say like, maybe we're starting to be a little more saturated and there's like been so much bull movement. People are very, have been very bullish on the stock. But especially if you're trying to make a career as a CEO, like sometimes in terms of your pay package, there's nothing better for you than saying, hey, look, Starbucks is up 40% and Chipotle is down, 20% since I left. That's how, he might be able to, find himself as, the next CEO of like an even bigger retail company. I was like trying to think. I was like, is there something bigger than Starbucks? I kind of want to
McDonald's?
look like consumer cyclical. Starbucks might still be the biggest game in town. Oh yeah. Well, we've got Amazon. Don't think that's happened. I mean, who knows? Like Amazon,
It's
Tesla,
hard
Home
to,
Depot.
those are very
Yeah.
different. I feel like they're not comparable, Amazon and Starbucks.
Yeah.
Yeah.
Yeah, I mean, McDonald's seems like the only thing he could like the only step up from Starbucks. Like, yeah, if you look at Chipotle, 1, 2, 3, 4, like Chipotle's four below below Starbucks in the rankings. And it might be Chipotle's 70 star. Yeah, it might actually be that they were a lot closer like when he made the move. So yeah, not a big upgrade. Just like that to me looks like he was getting a pay upgrade. But like Starbucks has been on the downswing and they've been doing some things poorly. So I absolutely think that he probably viewed it as like an upside play as well.
Yeah, so we'll watch out for some Starbucks announcements and see what this guy does moving forward and if he can maintain the share gains that we saw. And now, usually, if we see this kind of activity jump within the economy, we'd probably be excited, but I'm not so sure that this is actually a bullish story. Mortgage refinancing surged 35% last week, and year over year, it's up 118%. Obviously, we covered how rate cuts are coming, interest rates have dropped in anticipation. But can you explain kind of if this story is more bullish or bearish for the economy?
Um, so what makes this particularly weird, I would say, is that are we going a little slow again? I thought we had solved this problem. Can you I'm not delayed, right? Where am I?
Nope, you look good for me.
I've been paranoid after there's uh, we're seeing a little speed decline. Oh well, whatever. We're almost done. Um so the big thing is that traditionally, when you look at mortgage refinancings, you would say, why would they do that? Like rates are about to drop. It doesn't seem like the best time to do that. So what I would say is that this kind of shows what you're saying, that there is real strain, because like there's every incentive. People think there might be a 0.5% rate cut coming in September. Granted, that might not be something that like everybody is acutely aware of, but it's certainly something that like a lot of people can talk to their friends that know the economy and say this is a good time to refinance. And someone asked me, I would say no. Like I'd just be like, wait 6 months and you might have it like a percent lower. So yeah, that's a real sign of strain, that people are, going to their houses as cash registers, especially when interest rates are probably at the highest they're going to be, and everybody knows that. So yeah, you hit the nail on the head. It's definitely a concerning sign for consumer credit.
Yeah, so we'll have to watch the economy. I don't know, so many factors, especially with the election this year, but we'll keep everybody updated and a close eye on it on these streams. The last story we have to cover today, and before I get to it, I will ask, let's get up to double digits on YouTube and likes today. I see a lot of people tuning in, so I always love to see that mark hit. So let's try to get there. But it seems like people love when we cover these Warren Buffett stories, so we have another good one today. So we covered how Warren Buffett had sold Apple stock, about half of his position, and he'll now have to pay, these are estimates, but about $15 billion in taxes on that, which is more than Coca-Cola makes in a year in net profit, which is 14.3 billion. So just kind of showing the scale of Buffett's empire that he's built.
Yeah, I mean, if you look at the recent stories we've had, first you have that Buffett was had more treasuries than the US government. Now we have that, Buffett's basically like, even the tax bill of his sale is like eclipsing companies. I mean, yeah, the empire he has built is, better than a lot of countries. And we're going to see more and more of that as like wealth concentration gets greater. But, what's so interesting about Buffett in particular and the wealth that he's built is like he is the example of thrifty. He still eats at McDonald's, he drives the same car, he lives in the same house that he's lived in. And I've actually seen that house, like not in person, but I've seen like pictures. It's not that nice of a house. I don't know like how you could possibly have that much money and not at least want like, maybe you don't need a bigger house, but like a nicer one would seem to be like, I don't know, it's crazy. But he doesn't, he's a machine. All he wants to do is, work on his analysis, and he'll probably do that till the day he dies, and he'll probably be one of the best people at it until the day he dies. But the example that I actually always love to give in terms of like where just like, wow, like look at that empire, uh, is that there was a time when Buffett was like criticized for not giving more money to charity. And this is an interesting thing to kind of like look at the way conversations happen um, in society, because he was basically like, no, like he was like, no, and I'll tell you why I don't give more to charity. He's just basically like, I'm going to keep this money, I'm going to invest it, and I'm going to give that much more to charity later, because like I could give this to a charity and it's going to basically be like a fraction of what I could invest and improve it at. And the other thing is, it's just like he's just like, there's a lot of waste in charities. Well, the other thing is like I could give you I could give my money to a charity and like only 60%, maybe even less, goes to the cause, right? And this is what you got to respect about Warren Buffett. There are people that are just like, oh yeah, I'm sure you'll give to charity. Yeah, everybody says that. You just like want to keep it from yourself, which is kind of funny considering like the other things we talk about, eating McDonald's at the house. He's like, he's not like the kind of person that's like not giving money to charity and then like spending lavishly on himself. So even that on its face, but you know, it shows who he is as a value investor time and time again, how well. And we always say, if you want to be a good value investor, you have to like have a thesis and see if it's true, right? And see if it's valid, because it doesn't matter if you've made money if you don't know why you've made money and you can't repeat that process. So that's the really funny part. Not only was he right, and every dollar that he kept, we have stats where he can own the most treasuries, and his tax bill is larger than what Coca-Cola is making. But he donated his money to the Bill and Melinda Gates Foundation, and had a much larger say in what's happening. He's not like he doesn't have to pay large salaries to like these people that are running it, because they don't really need to like spend a lot of money like soliciting soliciting donations or whatever. I don't really know how much like that much about how it works actually. But he certainly has a lot more say in how his money is going to be spent, as like giving all of his wealth away to this one charity than he would distributing it to other charities. So that's all to say, like, his basic critiques of why he wasn't doing it proved to be right. And being a good value investor just means a lot of things. It means that you can predict the outcomes well, and that just doesn't apply to investments. And I actually think about that a lot in my life and when I make decisions, not just about investments. Like, I'm often looking at, what's my reason for it? And I care less about being right or wrong than if I had reasons and those reasons ended up being the right thinking. So, lesson for everybody in investing in life: I think the more that you do that, the better off you'll be. Because it's very easy to just like pat yourself on the back for good outcomes, but a lot of the times you could have just lucked into that, versus planning the outcomes is a much better way to make sure you're growing as a person.
Process. But I think on that note, we'll do our switch over, and we'll get on over to the model portfolio update. Great stream so far. I think a lot of great topics covered today. It's just me and you chat now until George joins us back in the Prospero.Ai laboratory. So let's take a live look at the markets and see what's been going on throughout the stream. So QQQ hasn't moved much, still just barely negative. SPY is up 0.25%. Dow Jones is up 0.5%. And here's a shock: the IWM is down the most today, 0.6%. Just never ceases to amaze me. Nobody wants small caps, but let's check in on the net option sentiments in Prospero of the QQQ and the SPY post CPI reports and see how they're looking, bullish or bearish. Okay, so QQQ is at 51, which is a more bullish level than we've seen it in recent weeks, and the trend of the chart in net option sentiment in Prospero is actually starting to look pretty good. Its lowest point was August 6th, and since then it's kind of on a nice uptrend of higher highs and higher lows. So maybe this rally we're seeing is sustainable, and we did hit the low with the recent drop that we saw. The SPY is at a level of 56, so slightly above the QQQ, like it has been recently. And its trend is also looking pretty good, but it's a bit more aggressive, where we see the low on August 6th and a big spike up and kind of holding those levels, and now starting to even gain a little bit of momentum recently, like the QQQ. So good to see out of those index readings we're seeing. And I think it's going to be very interesting to watch the market, like George said, throughout this week, if institutions are just, setting a head fake up for today, and we'll see the market rally the rest of the week. Who knows?
We are so short on time, but it doesn't matter because we're going to do a special edition. We are going to do a cut.
A cut?
So this is going to be... Yeah, so basically I've just been like adding, this week I've just been adding things based on the really cool net option sentiment mover thing that we got going. So I haven't been thinking about sectors, and I don't really care because it's been working. So what we're going to do today is we're going to look at just like the positions and and basically like what their metrics are. And what's the best way to do that? I'm actually going to grab the This is such a rush job. we really did not leave.
So we're beating the Fed to the cuts.
Yes. Well, we can't keep just like adding things, without making sure. There we go. Okay. So I'll start sharing now. Okay. So basically what we're doing here is we are get rid of these. We are going to take this sector sitch, and we're going to primarily look on like the 1 week, 1 month, because this is a longer view versus the 1 day. And we're going to mainly, I don't think I want to look for market cap right now. But we're going to just do a quick, right? We have sector, right? We need one more piece of information. We need longs. Ugh, we're never gonna do this in time. We're gonna do our best though. Now, I thought I got this. Come on, give me the copy. Ugh, it's even worse if this is going slowly. Oh, there we go. This is going to be hard. What? Yeah, we're not. We're going to run out of time. All right. Looks like we're doing this tomorrow. Why is SMCI saying consumer cyclical? That's just wrong. All right, I'm going to have to look into that. Oh, well.
we almost got a sneak peek on the stream, but maybe in an upcoming stream we'll go back to this.
What is SPY and QQQ net options sentiment?
So the QQQ was at 51. I'll check if it's still the same. It's at 50, and the SPY is at 56. Bullish day, and we are skewed that way. So we will look to reduce a large portfolio based on what? Signals are going in the wrong direction.
To do this cut. Disappointing. Starbucks. Hold on. MSFG. I don't love that. Lynn will leave. ASP will leave. Don't like that dominance. Okay.
All right, so we crossed the 1,000 viewer mark, so good to see.
Wait, I wasn't sharing my screen that whole time?
No, you were. It just went away like at the very, very end.
Oh, I don't know what happened there.
Yeah, it actually was good timing. That's how I knew you were done. But one thing we didn't get to talk, I don't know if you have any time. You had that thing with Finimize today at noon. How'd that go? If you want to share that before we sign off.
Oh, yeah, it went very well. I guess that we had like more RSVPs, attendees, and yeah, I had an NPS of 79, and they said they averaged 30 to 40. So I don't know. I mean, I don't know how bad the other speakers are. But yeah, I guess that's good.
All right. Good to hear. Great stream today. Lots of fun topics, and we'll see everybody back here Monday, normal time, 11 a.m. See everybody
All right.
there.
Thanks a lot.
Bye.